Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks track Wall Street lower as Nvidia earnings fail to impress investors. Shares slip in late trading. The Biden administration tells Congress it plans to cancel debt of more than $4.5 billion owed by Ukraine. Plus, U.S. Envoy Amos Hochstein is back in the region, hoping to clinch a ceasefire between Lebanon and Israel. It has just gone 8 a.m. across the Emirates. I'm Johannesburg in Dubai. Well, the focus for markets yesterday were those Nvidia earnings, and we are going to get into all of the details in just a short while. But ultimately, what we did see was disappointment from the investment community. Even though top line, bottom line, even guidance sort of came in line with expectations, what we did see is a dip in terms of where the stock was trading in post hours. So that is something to digest. We will analyze why in just a few moments. So right now, this is the picture for S&P futures, down about 0.3%. Similar for NASDAQ, down 0.5%, with Nvidia obviously being in focus there. And this comes after a lackluster session yesterday. Stocks continue to sort of trade sideways and take stock, so to speak, of the big rally that we had post-election. So this is the picture for futures. 10-year yields still sitting at 4.4, also taking stock, I would say. We've been trading sideways around these levels for a while now, though we did have a weak 20-year auction yesterday, level clearing about 3 basis points higher than where the bonds were trading going into the auction. That catapulted some of these yields to move higher as well in trading. And then Brent sitting at around $73, about 0.2% higher. Again, here it's been this constant battle and tug between some of the geopolitical developments going on, keeping a close eye on Ukraine, Russia, what's happening there, obviously in this part of the world too. And also as we head into that OPEC Plus decision, that is set to happen on December the 1st. So what they do with production is going to be key for market trajectory from here. In terms of our terminal chart today, I just wanted to sort of highlight what has been going on with other markets around the world, because we have been talking about the massive run-up in U.S. equities, U.S. exceptionalism. But take a look at what's been happening to China stocks. Despite the fact that so much fiscal stimulus has come through, we are very close to entering into bear market territory, down 15% since the highs. And if we do get down 20%, then that technically qualifies as bear market. So to talk more about what is happening in Asian markets today specifically, let's get out to Bill Hwang as ever in our Singapore studio. Bill.
Yeah, Jumana, we're seeing Asia markets mostly lower after Nvidia failed to impress, missing the mark on the high end of the revenue guidance for this quarter. And among the chip names in the region, you're really seeing a mixed bag. TSMC, for example, extending declines from a day ago, but gains in the likes of Samsung. And analysts have pointed out that they don't see massive selling simply because we already saw a bit of course correction in these chip stocks earlier in the year. Now, the other market that I wanted to highlight is what we're seeing in India, because today we, of course, got word that U.S. prosecutors are charging the founder of Adani Group. This is an Indian conglomerate whose business interests span from ports to energy, with involvement in a bribery port. And we're seeing the names in this group of companies, the stocks there, double-digit declines, and among the drags on the Nifty in India today. Jumana.
Huge story, that Adani story. We're also going to be talking about that later in the show. Avril, thank you very much for the overview. Now back to Nvidia. The chipmaker's revenue forecast failing to meet the highest expectations, suggesting that its dizzying AI-fueled growth run has its limits. Bloomberg Intelligence senior analyst Robert Lee joins us now. Robert, good to have you with us. Look, I just had to skim through the results. I'm not an analyst like you are, but from what I can tell, they beat on top line, they beat on bottom line. Estimates were kind of in line with what the market had been penciling, although not as high as the highest estimate. Why are we getting a negative reaction today?
Good observations and good question. I think, again, time and time again, as we go into each quarter's results of Nvidia's, expectations are so high given where the stock price is. It's been on all-time high in the last couple of weeks, and also where the valuation is. So I think it's a classic case of, well, I guess some people would say buy on rumour, sell on fact. The good news was priced in. There was nothing of any great fundamental consequence on the negative side, and they confirmed that demand continues to outstrip supply by a wide margin. As you mentioned in your intro, the only sort of negative in there in the near term is that their guidance for the coming quarter didn't quite meet the very highest of expectations out there. And I think as a consequence, that's why you're getting some profit taking.
Yeah, I mean, there are so many bulls, so many people are optimistic about where Nvidia can go from here. I mean, actually, we're going to be speaking to one of the notable bulls in the market, Dan Ives, in the next hour of the show. So the bullish story is quite well known. If we had to pick holes here, what would you say are some of the elements we need to watch out for?
Okay, I think one thing I'd draw on, as Avril mentioned earlier on, the level of incremental beat and raise that we're seeing from Nvidia is diminishing quarter by quarter. I mean, they still are beating expectations, but by a much thinner margin, which tells you, again, or confirms that a lot of the good news is already priced in. But in terms of fundamentals, I think what's driven the company earnings over the last 18 months or so has been a combination of both strong revenue beats and also margin progression. But what we're seeing now is the rate of incremental margin progression. You know, margins have quite possibly topped out, certainly in the short term. And actually, as we see an increasing percentage of Blackwell chip coming into the mix, that will actually depress their margins in the near term. So I think that makes the more reliant on revenue growth and volume growth rather than margin projections. And then I think the other main factor I'd say is, you know, I still think it's the case that whilst the customers of these products are beginning to monetize, they're not monetizing at anywhere faster rate at the moment to justify the very high levels of capex investment they're putting in. So I think those are two of the big fundamental issues, and I'd say as a consequence, the risk profile for this company is increasing.
It's so interesting you say that, because I actually had a one-to-one conversation with the UAE Minister of AI yesterday, and I brought up that exact topic, the amount of capex spending that's going into the space. And even this is the Minister of AI in the UAE, also warned that there are risks there, and they will have to start monetizing soon, given the amount of money that is being invested. Just very quickly, more broadly speaking, Nvidia has obviously been outperforming the rest of the semiconductor industry. What do you think are the main challenges facing the broader chip industry at the moment?
Okay, it's a massive industry across, you know, that's spread across many segments. Many of those are relatively commoditized, they're volume businesses. Take smartphones in particular. Everyone and anyone has a smartphone these days. So I think as we go into a slowing economic environment on a global basis, it's going to be harder to drive incremental demand. You know, things like smartphones are more dependent on replacement demand. So if people are a little bit uncertain about the future, are trying to rein in the costs a little bit, there's a risk on, you know, that as a core market. EVs, again, I think we all know and understand that EVs are the future on a, you know, 10, 15-year view, but there's oversupply in the market, and again, that is impacting the semis sector. So I think ultimately many of the end markets within semiconductors are, you know, volume markets, and they are highly correlated to the economic cycle. Whilst no one is projecting a recession next year, and we'll have to see what President Trump does, whether he can pep up US economic growth, but I think those core mainstream semiconductor markets are more likely to slow into next year, and, you know, there's some residual risk on the economic front. So we'll have to see how things develop on that front.
Yeah. Robert, so good to talk to you, as always. Bloomberg Intelligence Senior Analyst Robert Lee talking us through Nvidia results and the sector beyond. Right, so some news just coming in. Bitcoin has hit another record high, $96,000 for the very first time. I remember back in the day when people were estimating that it could go as high as 100,000, so 6 digits. There was a lot of skepticism, but there has been a massive run in the past couple of weeks, given the return of Trump to the White House and the expectation that his administration will be friendlier to the crypto community in terms of regulation. So this is where we are. Bitcoin, $96,000 for the first time. And still ahead, the Biden administration plans to cancel billions of dollars in debt owed by Ukraine before Donald Trump takes office. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Johannesburg in Dubai. The Biden administration has told Congress it plans to cancel $4.6 billion in debt owed by Ukraine. Meanwhile, Russia says it is prepared to discuss a potential ceasefire in the conflict with U.S. President-elect Donald Trump. Now, for more, let's bring in Washington editor John Harney. John, there have been quite a few developments on the Ukraine front in the last couple of days. It seems as though the Biden administration is really stepping up their efforts in support of Ukraine, allowing them to fire these long-range missiles, now talk of potentially canceling debt. Why are we seeing so much action on the U.S. part right now?
Well, first of all, Ukraine has been, has been under siege really by Russian forces, who have made slow but steady gains at great cost over the course of the last several months, and winter's setting in, and finally, the Biden administration won't be in office beyond late January, and no one really knows what Donald Trump plans to do regarding the Ukraine war.
Yeah. So let's go back to those comments regarding Russian President Putin being willing to engage in discussions with President-elect Trump vis-a-vis a potential peace deal. I mean, how seriously should we take this, and why is he specifically singling out President Trump as opposed to President Biden?
Well, Donald Trump, during the campaign, said he could end the war in a day. I mean, that clearly is not going to happen. Both sides, really three sides, including the United States, are maneuvering at this point to try to for the best advantage. Putin is trying to gain as much territory as he can because he really has to show that something has been gained for the massive losses that the Russian the Russian troops in a conflict that began nearly 3 years ago. Ukraine, of course, wants to make battlefield gains itself, there's a lot in flux right now before Trump takes office.
Yeah, that's one way to put it. A lot of flux before he takes office, and we haven't even spoken about what's going to happen after he takes office. Washington editor John Harney, thank you very much. Well, from one ceasefire discussion to another, a senior White House envoy has traveled to Tel Aviv from Beirut in a bid to clinch a ceasefire deal in the fighting between Israel and Hezbollah. After meeting with Lebanese officials this week, Amos Hochstein struck an optimistic tone, saying he'd managed to bridge some of the gaps between the two sides. For more on this, Bloomberg's Stuart Wallace joins us around the desk. So, we've been tracking Amos's trip to the region the last couple of days. He seems to be still quite optimistic. And yesterday we were talking about the fact that he even is engaging in a trip to Israel is perhaps a positive sign that he has enough on the table to present to the Israeli Prime Minister.
Yeah, I think that is a fair reading of the situation. I think there's also optimism within Beirut, as we saw this morning on social media, as you pointed out. I think, look, the reality on the ground is that Israel is in a position of strength here. And you have a Prime Minister in Israel who I suspect is going to be making more and more demands about what this deal might look like. And it's going to get close to those red lines where it's going to become unacceptable. So really we'll watch over the next 24 to 48 hours to see exactly what those demands are. If he continues to insist on being able to act unilaterally in southern Lebanon in the future, that's going to be a problem.
Yeah, so the thing is, when people talk about Israel's war objectives within the Gaza Strip and then Israel's war objectives in Lebanon, within the Gaza Strip, it was to fully neutralize, demilitarize Hamas. In Lebanon, it is to restore security to their northern border and to ensure that those strikes from Hezbollah aren't going to continue. But what they have been doing the last couple of weeks suggests that they actually do want to fully neutralize Hezbollah. The airstrikes are continuing. They are as targeted as they're trying to be, but going after specific names, specific officials very closely associated to Hezbollah. What guarantees are there that those types of targeted, so to speak, attacks will stop, even if the ceasefire deal is passed?
I think very unlikely, because, again, Israel is in this position of strength. And I think it goes beyond this. A little later this morning, we'll be putting out a piece that will basically say part of the objective here is to give it operational flexibility. And by that we mean it can go after Iran if it wants to. So in the past it's always been quite wary about going after Iran, partly because of Iran's arsenal and because it's quite aggressive. But actually Hezbollah has been a big factor in restraining Israel in terms of acting on Iran directly. So the more they degrade Hezbollah, the more they wipe out the leadership, and they are pretty much already there. Most of the senior leadership is gone. Then that gives Israel the confidence to be able to take on Iran. And what that might look like over the next 6 months to a year is something we'll watch. But it definitely has changed the balance of power in the region.
So how does that factor in? I don't know if this is somehow coincidental, that IAEA report that came out suggesting that Iran are open to stopping their enrichment program, nuclear enrichment program. Is that a political decision on their side?
Yeah, it certainly looks that way. I mean, the context there is that they already have rather large stockpiles, and the stockpiles did increase since the last report. So I don't think it's one of those Gaddafi moments where they're sort of giving up all nuclear ambitions, that's for sure. And again, you know, officially they have continued to say we're not after a nuclear weapon. I'm not sure at 60% enrichment anyone really believes them anymore. So they're keeping that option on the table, and again, it's something that will develop over the next several months. It does look like they're sort of gently edging towards a position where they can get some sort of stability back in the picture, because the one thing you can say about the regime in Tehran is they are great survivors, and that ultimately what they're interested in is survival, not necessarily winning individual skirmishes.
So tactical versus strategic. Stuart, thank you very much. That was Stuart Livingstone-Wallace, Bloomberg's executive editor for MENA and Russia. Well, coming up, hear why Standard Chartered Bank says U.S. assets are climbing a sugar mountain as markets look ahead to a second Trump presidency. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Asian equities have slipped in Thursday trading, reflecting a muted mood on Wall Street, triggered by Nvidia's lackluster revenue forecast. So to discuss the stock market performance and beyond, Eric Robertsen joins us. He's Global Head of Research and Chief Strategist at Standard Chartered Bank. Let's just rewind back, because I don't think we've spoken since the U.S. elections came out, and it feels as though the whole market narrative has changed. We've had a massive run-up in stock markets. Investors are starting to price out some of the rate cuts that were priced in to 2025. We've seen a massive run-up in the USD as well. Have we sort of fully factored in the Trump trade? Because the last couple of days, things have started to stabilize somewhat.
Look, it's a question that we're trying to answer for clients. There's no doubt that there is a tidal shift in the economic outlook and the policy outlook, right? You have to expect more fiscal stimulus in the world of Trump 2.0. Expect more fiscal stimulus from other countries around the world. But I guess the real conclusion that everybody's coming to, ourselves included, is that probably means less need for monetary stimulus from the Fed. So we've seen this significant repricing of U.S. rates higher, and that's given the dollar some support. Is it fully priced in? I think a reasonable amount of the Trump agenda is in the price. But I don't think we have fully factored in some of the fat tail scenarios, right?
Yeah.
If he goes fully with 60% on tariffs, on China, and some of the other fiscal stimulus measures that he's talked about.
Yeah, but equally, the market sort of jumps to the worst-case scenario, which is the 60%, the 20%, and that would have a very adverse impact. But what if the tariff discussions end up in deal-making as opposed to the application of tariffs? So what if the tariffs are only applied to intermediate goods, capital goods, as opposed to end consumer goods? In which case, that would be a positive surprise to the market.
Well, I actually think that's what a lot of people are assuming. I think there is a built-in assumption that Trump will start with a very aggressive negotiating stance and then work his way backwards. And I think the big shift that we've seen in prices, euro dollar going from 112 to 105, or the move in some of these other markets, was a big shift in market expectations from where we were pre-election. So I think some of it is just a complete reversal of positioning. But I do think the market is unprepared if Trump were to come out in January with his full team in place and say, we're going to be aggressive from the get-go. And I don't think the market is quite prepared for that.
Okay, interesting to note. On the inflation front, I thought the UK inflation numbers yesterday were quite interesting. Is there an element of complacency in the marketplace about how sticky inflation actually is, do you think?
I think so. And you can look at that in a couple of different ways. The first is that most forecasts out there assume that we're still on this gentle glide path towards inflation targets. In other words, the trend of disinflation is moving in the right direction. You even see it in the bond market, right? We've seen a huge increase in U.S. Treasury yields, but most of that's been led by real yields, not by inflation break-evens. And so I do think the market is a little bit comfortable that we're still in a pretty benign story for inflation. And I think there's a very reasonable narrative that says between stimulus, between tariffs, between a number of other factors, that you may see a pickup in inflation again next year.
Yeah, and to your point, perhaps not being fully factored in to some of the investment choices that asset allocators are making right now. The other characteristic of the last couple of weeks is U.S. stock markets have outperformed global markets around the world, and the hardest hit markets were in China and in Europe. Do you think that that is, again, a valid read?
I think relative to where we were prior to the election, yes, I think that's fair, right? I mean, we had a significant run-up in share prices in China on new stimulus measures. It looks like a policy shift onshore. And I think in a world of Trump 2.0, you have to build in a wider distribution of outcomes on both sides, right? And obviously what people are worried about after the massive rally is a retracement. Europe is very different. I think Europe is in many ways most vulnerable to the world of Trump 2.0, because there's obvious implications from tariffs and a slowdown in global trade. But also we have to remember, Europe doesn't have the fiscal flexibility that China does. And so you may see 100% focus on monetary easing from the ECB, which is, I think, what the euro has reacted to.
Interesting. And just on the China front, they obviously still have the ability to start dialing up the fiscal stimulus if they want to. Why are we not seeing that translate into Chinese stock markets?
I think investors, both onshore and globally, are saying, look, there's been the promise of stimulus to come. No hard numbers yet. But what I think policymakers in China are doing is saying, let's wait and see what actually transpires in terms of tariffs, in terms of policy, and then we'll figure out how much we need to stimulate. And so I think there's a very calculated decision not to preempt the negotiating that's going to come.
Yeah, I think that's a very valid point as well. They don't use everything in the toolkit before President Trump takes office. Great to have you with us on the show as ever. That was Eric Robertsen, Managing Director at Standard Chartered Bank. Thank you very much. Well, a quick look at equity futures before we head to the break. Markets continue to digest Nvidia earnings. It's putting a bit of downward pressure on NASDAQ here, leaning towards the red, down 0.4%. Now, coming up, Turkey is counting on President-elect Donald Trump to ease some sanctions. We'll discuss what we're referring to in just a few moments with all the details next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks track Wall Street lower as Nvidia earnings fail to impress investors. Shares slip in late trading. Turkey is hoping President-elect Donald Trump will waive sanctions imposed over its use of a Russian air defense system. Plus, Adani shares sink after the U.S. charges founder Gautam Adani on fraud. We are live in Mumbai with the details. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. Well, as we were just talking about, investors have not really been impressed by the set of results put forward by Nvidia last night, even though the results came in line in both top line, bottom line, the guidance. But you could say that perfection, the stock is fully priced to perfection, which is why we're seeing a bit of a pullback, and that's impacting the where futures are trading today. We've got the NASDAQ down 0.4%, leaning into the red, given the decline declines in Nvidia after hours. S&P also down about 0.25% as well. So marginal losses on these indices. We're not talking about anything major here, but Nvidia, of course, will be a focus as we head into the U.S. session. 10-year yield sitting at 4.39. Some attention on the weak 20-year auction that took place yesterday that posed some upward pressure to the bond market throughout the course of the day. And then Brent sitting at $73 now, just about 0.2% stronger. We spoke about this earlier, but geopolitics on one side, but the other side is the demand picture and the supply picture for oil as supply continues to ramp up. Remember, we have that OPEC Plus meeting on December the 1st. What those voluntary cutters decide to do with their production output will be a big driver for markets. Switching over, though, we had some breaking news about 15 minutes ago showing that Bitcoin has reached an all-time high. We've broken through $96,000, so it's steadily approaching that six-digit target, $100,000 that many in the market had talked about. But this just shows you how far the cryptocurrency has come. I mean, this chart is going all the way back to 2015, but more specifically in the last couple of weeks since the U.S. elections. And there, the perception is that the return of Trump to the White House is positive for the cryptocurrency community and that they'll have a less heavy-handed approach to regulation. So Bitcoin through $96,000 here. All right, let's check in on how markets in Asia are faring as well. Avril is in our Singapore studio. Here, the focus has been on Bitcoin, but I'm sure there have been some ramifications from the Adani news overnight. Avril, just bring us up to speed.
Absolutely, Jumana. I mean, that's really the focus, apart from Nvidia earnings, for this part of the world after U.S. prosecutors charged the Adani founder with involvement in a bribery plot. And the investor reaction has been really swift. Double-digit declines on the stocks of the group of companies in the group, I should say. And we're also seeing in its dollar bonds initially as much as 10 cents in declines. But I also wanted to put things in perspective, because this idea that, that could affect the broader markets in India, Abhishek Vishnoi of our stocks team highlights that when you look at the January Hindenburg allegations, we did see Indian markets suffer for about 2 months after that. And subsequently, it was a pretty steady recovery as investors kind of rode the tailwinds of India's growth story. More recently, the declines are related to earnings disappointments and really high valuations. But keep that in mind. This recovery that we've been seeing in the broader India market since the Hindenburg scandal, even as we see the declines in Adani stocks and the broader India markets today, Jumana.
Avril, thank you so much. Avril Hwang in Singapore. Turkey is pinning its hopes on President-elect Donald Trump to free it from sanctions over its use of a Russian air defense system. The president could ask Congress to waive legislation that effectively cut off Turkey's top defense procurement agency from U.S. financial institutions, military hardware, and technology. That would allow Turkey to buy fifth-generation F-35 jets built by Lockheed Martin. So a defense angle to all of this. For more, let's bring in Bloomberg's managing editor for Middle East and North Africa, Honor Ant, who joins us here in Dubai. It's good to have you with us in Dubai. Usually you're out in Istanbul. Maybe let's just talk about what the return of President Trump to the White House means for the relationship between U.S. and Turkey. It's been a bit testy over the years, and certainly back in the day, Trump was responsible for a plunge in the lira when they decided to impose extra tariffs. Why will this time be different? Why is there potentially hope for a defense deal between them?
Well, that's actually a great point. When people think about the Trump era, they tend to focus on the good stuff, the personal chemistry, if I may call it that, between Erdogan and Trump. But there were times where the relationship was really strained. And in fact, one of the worst currency crisis that Turkey had ever had was during the Trump era. And you can argue that was at least partly triggered by comments made by Trump, things like, I will destroy their economy over a diplomatic row between the two countries, basically over the detention of a U.S. pastor in Turkey back in the day. But on the other hand, it is true that the two leaders do share personal chemistry. And there were times where, Trump seemed to really buy into policy arguments made by Erdogan in places like Syria, where the two countries have sometimes conflicting, sometimes not so interests. So people believe there is a chance Trump will be more responsive to Turkish demands or requests, including the sanctions issue, which is huge for Turkey, not only because it prevents Turkish companies from accessing U.S. markets, some defense companies, but also because of the fact that Turkey has been booted out of the F-35 program. And that's a huge issue for Turkey, despite all the success of Turkish drones and missile programs. Turkey does need to have a fifth-generation fighter jet because Turkish officials worry that their arch rival in the region, Greece, will have access to F-35s, and it could dramatically change the balance of power over the Aegean, where the two countries have competing interests.
Yeah, that is a really interesting point. But just to come back to what you're saying, I thought it was interesting that President Erdogan, on the sidelines of G20, he was asked about the U.S.'s decision to allow Ukraine to use long-range missiles, and he was critical of the decision, not supportive of empowering Ukraine further with their own defense system.
To be honest, that's not shocking given the history of Turkish policy on Ukraine and Russia, because they've been trying to engage in this balancing act. On the one hand, obviously Russia is a huge supplier of gas as well as crude oil to Turkey, and Putin and Erdogan have a strong relationship. Russia is building Turkey's only nuclear power plant in the south of the country. But on the other hand, Turkey does have a lot of interests in supporting Ukraine, including the import of Ukrainian engines that are used in Turkish defense industry, especially for Turkish drones that are so reputable. So they've been trying to balance the relationship between Ukraine and Russia, and they do think that anything that Ukraine would do using Western supplied munitions to strike targets inside Russia could escalate the situation out of control, and that's not in Turkey's interest.
Well, Onur, I'm not going to let you go without asking about the central bank rate decision today. It's going to be a big one, and namely because President Erdogan has started to suggest that it's time for interest rates to be lowered, but inflation is still running north of 45% in this economy. Is there political pressure on the central bank right now?
Well, that's hard to answer because Erdogan's latest comments have been very cryptic. But we know from the past that Erdogan is a leader that believes low interest rates will result in slower inflation, which is not exactly in line with orthodox thinking on how that dynamic works, but that is what he believes in, and he did make some cryptic comments. Now, will that result in the central bank cutting rates today? We don't know, obviously, but on the other hand, we know this for a fact. Lately, Governor Karahan made comments that could justify a cut and still, allow him to say, yes, we did cut rates, but that does not result in a loser policy because the spread between inflation and interest rates, so to speak, have remained more or less the same given the last 2 months drop in inflation rate. Having said that, the market consensus is that there will not be a cut today. But, well, let's see.
Well, maybe if he starts talking about real rates, then we know that's exactly what he's referring to. The real rates will still stay high given inflation is dropping. So it's a big decision coming up today out of Turkey. Onur Ant, Bloomberg's managing editor for Middle East and North Africa. Thank you. Now, the International Monetary Fund says it has made substantial progress in discussions with Egypt on the latest review of its $8 billion program. An IMF mission has wrapped up a visit to Egypt to observe the enactment of its expanded program. Passing the latest review would unlock a $1.3 billion loan tranche. Let's go to Cairo now and bring in Mohamed Abu Basha, head of macroeconomic analysis at EFG Hermes Research. Great to have you with us. Maybe let's just pick up with the ongoing assessment, IMF assessment of the progress that Egypt has made. It doesn't seem like there's going to be much doubt that this next tranche, that $1.3 billion tranche of the IMF bailout program, is at risk. It seems as though it should, in theory, pass without any hurdles.
Yes, I think that's clear from the statement, I guess. Maybe the work is not done as the statement obviously comes out. There's no staff level agreement yet, but I think, it clearly pointed to the progress that has been done between the two parties, and I think our assessment is indeed it's just a matter of time to clear some issues here and there, and then soon we're going to wrap up this review as well.
Yeah, the IMF said it is encouraging Egyptian officials to accelerate their divestment plans and to speed up reforms. How likely is it that we're going to see the Egyptian government continue with some of these divestment plans? Are they actually heeding IMF's advice?
I mean, I guess they are. I mean, we're already seeing, and they have expedited, the IPO of United Bank that was initially supposed to take place in the first quarter of next year, as per initial statements, but it's actually happening now. I mean, it started officially yesterday, the private offering. So already we have, the first divestment for this year is ongoing, and I guess, they still have another 6 or 7 months for the rest of the fiscal year just to press ahead with that. I think there was a story a few weeks ago about maybe a potential deal as well for the partial stake in Bank of Alexandria. So I guess we're starting to see a bit of progress. Obviously depends though how big the divestment will end to be this year.
How do you see the path forward for the Egyptian economy? So many things going on here. You have the IMF bailout program. You had the fully flexible currency introduction that was introduced earlier this year. But then also the economy is very much being impacted by some of the geopolitical tension in the region. They've been hit by the loss of shipping receipts coming through the Red Sea. Putting all of that together, how do you see the trajectory for the economy from here?
So I guess, authorities have been really focusing on restoring macro stability. We've seen that gradually coming back. Foreign exchange markets started to be functional again, post the March flotation, easing the FX controls, gradually trying to, I think now the focus primarily is to try to bring inflation down. Obviously, they had to undertake a number of fiscal consolidation measures. We've seen 3 fuel price hikes. That obviously have been putting a bit of pressure on inflation as of late. I think the key focus will try to bring inflation down and maybe open a little bit room for the central bank to cut rates next year, as inflation normalizes and there is a bit of room to start, cutting rates. The war obviously has a big impact in terms of its impact on Suez Canal revenues, a little bit as well on tourism. So developments on that front next year is going to be critical as well to try to provide, some, breathing space a little bit for the economy. But as I said, for now, I think authorities are continuing with the macro stabilization kind of exercise, and the focus is really on trying to, control inflation and bring it down and maybe open room for rate cuts next year.
Yeah, so the inflation path seemed to be going in the right direction for most of this year, but in the last couple of months, it's stalled. Why is that the case? And when do you expect inflation numbers to start dropping again?
It's primarily because of the fiscal measures that have been enacted. As I'm mentioning, there has been 3 fuel price increases in the last 6 months, combined impact almost of more than 60% increase in local currency terms. So obviously that's a big one. There's been an adjustment in power tariffs and, water tariffs and a number of other administered prices. So that has had a bit of an impact on inflation. As this kind of, phases out and as, the government is taking a bit of a break from the fuel price hikes, they said with the last statement that they're not going to change prices at least for the next 6 months. I think this will give, room for inflation to, cool off a little bit. And obviously we're all waiting for the numbers earlier in this year and early next year, particularly in February, where the base effect will basically normalize. And that will push inflation, according to our numbers, into, mid or low teens. And then, will allow the central bank a little bit of room to cut rates.
Brilliant. Thank you so much for joining us. Great to listen to your perspectives on the Egyptian economy. Mohamed Abu Basha, Head of Macroeconomic Analysis at EFG Hermes Research. Now, coming up, U.S. prosecutors charge Indian billionaire Gautam Adani with bribery. We're in Mumbai with the latest and next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Shares of Adani Group companies tumbling this morning. That's after U.S. prosecutors indicted the group's founder, Gautam Adani, and other executives on bribery charges. The company's renewable units have also scrapped a $600 million bond offering. The New York-based prosecutors allege Adani and other defendants promised to pay more than $250 million in bribes to Indian government officials to win solar energy contracts and concealed the plan as they sought to raise money from U.S. investors. For more, let's bring in our South Asia editor, Anto Anthony, in Mumbai. Quite a shocking story, and clearly markets are not taking it well, with many of these Adani-linked stocks down anything from 15 to 20%. Just walk us through how the reaction has been within the Indian business community.
That's right. Shares of the companies controlled by tycoon Gautam Adani, there are about 10 of them, has tumbled in Mumbai trading today morning after Wednesday the Brooklyn prosecutors came out with the allegations against the tycoon. So they even had to scrap a $600 million debt sale which was underway in US following these allegations. Their debt securities across the globe have also plunged. So the Brooklyn-based prosecutors are saying that Gautam Adani and his key associates have bribed Indian government officials by promise of more than $250 million so that they can get solar power projects awarded to them. We have to keep in mind that Adani is one of the largest renewable energy producers in this part of the world, and he is also building what is supposed to be the largest renewable energy park in the world as of now. So it's quite shocking as such, and we are just still trying to assess what would be the material impact from these allegations. The group is yet to respond on record about how they will take this forward.
So, from what I understand, you managed to talk exclusively recently with Gautam Adani as well as Sagar Adani, and you did ask them about those bribery investigations. What did they tell you when you put the question to them, when you spoke to them, obviously before the U.S. news came out overnight?
Yeah, that was a couple of months back. When we spoke with them, we posed this question about the DOJ investigation, which is a news which Bloomberg has broken and was covering over the last 1 year. Sagar Adani, who is heading the energy business, told us at that point that they have nothing further to disclose rather than what exchange filings that they have made. He also said that this is more of a procedural inquiry by a U.S. agency. At that point, the group even made exchange filings saying that the U.S. prosecutors hasn't reached out to them with any specific questions. We don't know what transpired over the ensuing months. And we are still waiting for a response from the group, a statement from the group to say what they have to say and how they will take this forward. We also have to keep in mind that it's up to Trump administration to decide how to proceed further with this.
Yeah, that's also a really valid point, because the administration is changing in a couple of months and these things take time. It could actually become a bit of a diplomatic point of contention between India and U.S. So something to think about. Thank you, Anto Anthony, our South Asia editor in Mumbai. Well, coming up, Gulf diplomacy, not Gulf, Gulf diplomacy. We look into why South Africa might be counting on its richest man to help establish a relationship between President Cyril Ramaphosa and Donald Trump ahead of next year's G20. The story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Versace in Dubai. Well, world leaders have departed Rio de Janeiro after the last major G20 summit of the Biden era before Donald Trump returns to the White House. South Africa's Cyril Ramaphosa will host the 2025 summit, and despite his relative inexperience on the biggest global scale, he is confident he'll be able to strike up a rapport with Trump.
I look forward to working with President Trump. He's going to be part of the Troika in the form of the United States, South Africa, and Brazil. So we have to work together. We're joined at the hip, as we prepare both for the South African G20 summit, and they also prepare in the following year for the US G20. So we're going to be working together for a solid 2 years, if not 3.
Well, South Africa's richest man, Johan Rupert, seems to think one inroad could be the two leaders' love of golf, because golf brings everyone together. Let's bring in Bloomberg's Prinacha Naidu, who's in Johannesburg. Prinacha, talk us through how Mr. What is his name? Mr. Johan Rupert, apologies, has intervened to connect the leaders at this point.
Jemana, reports suggest that Johan Rupert actually brokered a call between President-elect Trump and the South African President Cyril Ramaphosa. It was, we believe, a wide-ranging call to discuss everything from trade as well as South Africa taking over the G20 presidency.
Why is it important for South Africa to have Trump as an ally?
For South Africa, as we mentioned, South Africa is going to take over the G20 presidency. That term starts at the beginning of next month. And it's going to be the first African country to do so. President Cyril Ramaphosa himself has said he's going to use this as an opportunity to advocate for Africa's development priorities and for the priorities of the global south as well. And having Trump as an ally would be helpful in that regard. For South Africa itself at home, forging a strong relationship between the two presidents could help secure the country's preferential access to preferential trade access, that is, to the U.S. market, which is the world's biggest market. That's after strained relations between the two nations put that at risk for South Africa. The U.S. is, of course, South Africa's second biggest trading partner, and maintaining good relations with the two countries would help the new South African coalition government boost an economy that's barely grown over the last decade.
Yeah. Prinacha, thank you so much. Bloomberg's Prinacha Naidu in Johannesburg. Speaking of Johannesburg, Jen is joining me the next hour, and hopefully she's brushing up her golf skills before that G20 in 2025 next year. We'll be right back in just a few moments. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks track Wall Street lower as Nvidia earnings fail to impress investors. The chip giant shares slide in late trading. The Biden administration tells Congress it plans to cancel debt of more than $4.5 billion owed by Ukraine. Plus, Bitcoin's red-hot rally. The cryptocurrency hits a record high as President-elect Trump's team are set to discuss creating a new post in the White House. Good morning. It's just gone 9 a.m. across the Emirates. I'm Jemana Versace in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone 7 a.m. Welcome to the second hour of Horizon's Middle East and Africa.
Good to have you back with us, Jen. And we also finished off the last segment talking about that G20 in Johannesburg next year. And I was saying you might have to brush up your golf skills ahead of it, given the story that's on the terminal.
I heard that.
Right, back to markets now. The focus for markets was on Nvidia earnings, and we will talk more about it. But essentially, the reaction in the market was one of disappointment, and that is why we're seeing a bit of a pull down this morning for Nvidia futures. Not a lot, though, down about 0.3%. S&P futures also down about 0.2% as well. Again, they're tracking some of the earnings that is coming through from the retailers. Walmart better than expectations. Target a bit of a down trade for the S&P yesterday. 10-year yields 4.4 is where we're at. A weakish 20-year auction yesterday pushed yields higher to the tune of about 3 basis points, but still sitting at around 4.4. And then Brent at around $73, about 0.2% firmer as we get closer and closer to that OPEC Plus decision. But there's one asset class that everyone's been paying a lot of attention to in the last couple of weeks, and that is cryptocurrencies. Bitcoin today making an all-time new high of $96,000. And our colleague David Inglis actually sent along a couple of statistics, which I thought were quite interesting. The market cap of Bitcoin is set to top $2 trillion. If Bitcoin were actually a company, obviously it's not, but if it were, in terms of market cap, it would be the 6th largest in the world, just behind Amazon, but larger than Aramco. So there you go, those statistics, thanks to David Inglis. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Avril, just walk us through these markets.
Yeah, Jumana, I mean, we've been seeing that ripple effect from Nvidia earnings, Adani stocks, bonds also slumping, but I wanted to highlight what we're seeing in the Japanese currency, still looking pretty weak, but a bit of a downward tilt on dollar yen. And this comes ahead of a speech by BOJ Governor Ueda shortly. He's not expected to say anything materially different from Monday, where he didn't give anything away in terms of the timing of the next rate hike. So there's no market consensus of what December will hold from the BOJ, but it'll still be really interesting to see if he says anything about the yen. And of course, this is coming ahead of tomorrow, where we are watching out for Japan CPI print that on headline core are all expected to show it holding above 2% and inflation momentum maintained in the country. So this is what I'm watching as well. Guys?
Avril, thank you so much. That was Avril with the latest from Singapore. Now, shares in Nvidia finished lower in after-hours trading after the chipmaker at the heart of the AI boom delivered a revenue forecast which failed to meet investors' high expectations, suggesting the company's dizzying growth run has its limits. Now, despite companies such as Microsoft, Meta, Amazon, and Alphabet planning multi-billion-dollar investments in AI infrastructure, the UAE's AI minister says there's a tipping point where these investments will need to show economic value. I spoke to His Excellency Hamad Al-Alama at Bloomberg's Future of Finance conference in Dubai.
I think the economics are a bit skewed. And I'm not saying that this is a bubble, but I think that it is only going to continue if we are able to derive economic value from the billions of dollars that are being spent. Today, so up to this date, the spending was something that could be considered discretionary income for these companies, right? So $1 billion isn't much for a company that's generating $100 billion of revenue, right? Or $50 billion, or whatever the amount is, depending on the player that you're talking about. When it comes to 15, 20, $30 billion, that money adds up. And if you're not able to monetize it and actually create a use case that clearly identifies where you're able to derive value, it's an issue.
Well, to discuss the AI boom and Nvidia earnings, Wedbush Managing Director and Senior Equity Analyst Dan Ives joins us. Dan, it's great to chat to you again. It's been a while since we last spoke, but good to have you on right after these Nvidia earnings. You're known to be one of the big bulls in the market. Are you happy with this set of results that were put forward by the company? A few people are picking up on the fact that their estimates for Q4 were perhaps slightly more muted than what some analysts had been hoping for.
Yeah, I think it's a champagne moment. I mean, this is a stock I think that's going to be ultimately up tomorrow. Look, I think what this just shows, this AI revolution is still in the early days of playing out. And that's why the godfather of AI, Jensen Nvidia, continue to drive this market. And I think this is something tech bulls come away from this feeling more and more, I think, emboldened going into a tech rally into year and into next year, led by Nvidia. We think $4 trillion on the doorstep.
Let me just ask you about Blackwell specifically. They point to some of the manufacturing challenges that have slowed the rollout. And again, it seems as though demand is going to massively outpace their ability to provide these chips to the market. So is that not going to pose a bit of a dampener to the stock in the near term because it's also going to eat away at margins?
Yeah, look, I think right now demand to supply is 15-1. And that's look, this is so unprecedented. But if you look at that call, no overheating issues, everything we've seen from our check show production, and the ramp's going to even be quicker than expected. But to give numbers, Street originally was thinking, let's call it $2 billion per quarter, maybe $3 billion. This is probably going to be closer to 7, 8, now potentially $10 billion per quarter as it all run rates. What that basically just shows, we're going to be sitting here a year from now. Jensen's still wearing the black leather jacket. And I think this is an Nvidia that can now start to go toward $4.5 trillion. And I think along with Apple, will break these thresholds.
What do you make of the fact that it seems to be reliant on just a handful of customers? The main three are Microsoft and Amazon. Actually, Microsoft and Amazon make up about 50% of the data center revenue. Does that not leave them exposed, and perhaps signals that the more broader penetration just isn't happening right now?
Yeah, I think it's a little skewed because that really represents thousands of end users, in terms of where ultimate demand's going. But I think when it shows big tech, look, that's $500 billion of AI capex. The sovereigns haven't even played yet into this role, as well as much of the Fortune 1000 and 2000. You're going to have trillions of AI capex out there, led by big tech. But essentially, they're building out cities from the ground up. Dubai, Vegas, that's essentially what they're doing from an AI perspective. And there's only one game in town when it comes to chips, godfather of AI, Jensen, Nvidia.
Well, okay, so let me put another question to you, because we have a new president, well, a returning president coming back to the White House. He's talked about tariffs, and even under the Biden administration, we've seen the restriction of the export of certain types of technology to jurisdictions around the world on concerns that some of that technology could find itself in the hands of China. How much of this is going to weigh over Nvidia stock? The threat of tariffs and the threat of further ramping up of some of these geopolitical tensions between U.S. and China?
I think the reality is it's going to be pretty contained relative to any sort of impact for Nvidia, Apple, Tesla. I think there'll be carve-outs. Musk is going to have a very significant seat at that table. And look, this is going to be a negotiation. But when it comes to Nvidia, I don't see that this spoils the party. There's going to be certain restrictions, but nothing that I view as backbreakers. And that's the key where we stand today, is that there's, especially with Trump in office, and AI that's going to be a huge focus, and essentially defanging of the regulatory environment. I think there's a tech bull market. It's still right now 9:30, 10 p.m. in this party, goes to 4 a.m.
All right, so there are a few more hours left of this party. The final question I have for you is just about the market reaction here. It's been negative in after hours, and I wonder again if this is a reflection of just how much positivity and optimism is already baked into the stock, in the sense that the bar for outperformance has moved a lot higher than it was in the past.
Yeah, but also remember last quarter, I mean, stocks sold off significantly. The bears, who haven't, they come out of hibernation mode, saying the stock's going sub 100. It's 17% above that level, right? I believe this will be short-lived. Bears go back into hibernation mode. Stock makes all-time highs. I believe there's a stock that's green tomorrow.
Okay. Well, let's check out the performance in a couple of hours when it starts trading. Thank you for staying up late for us. Dan Ives, Managing Director and Senior Equity Analyst at Wedbush Securities. Thank you. Well, still ahead, the Biden administration plans to cancel billions of dollars in debt owed by Ukraine before Donald Trump takes office. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. The Biden administration has told Congress it plans to cancel $4.6 billion in debt owed by Ukraine. Meanwhile, Russia says it is prepared to discuss a potential ceasefire in the conflict with U.S. President-elect Donald Trump. And for more, Bloomberg's Greg Sullivan joins us now. Greg, so interesting to hear about these suite of measures that the U.S. administration is introducing, obviously last couple of months with the Biden administration in the White House. How should we read all of these efforts?
Well, I think that in a lot of ways, this is the Biden administration trying to help Ukraine, trying to position them as best they can before Donald Trump returns to office. Obviously, a lot of the aid has become a contentious political issue in the U.S., and Donald Trump has surrounded himself with people who have been very critical of that. So it raises the prospect that aid could be cut off. So the Biden administration is trying to search their powers for everything they can do to position them to have the full support and be in the best possible position when this tidal wave in geopolitics basically comes in January. So the debt cancellation, the authorization of missile strikes into Russia, all this can be interpreted as positioning Ukraine as best they can ahead of this.
Yeah, but things seem to be escalating even further on the ground. Ukraine used those long-range missiles. Yesterday, the reports that also they fired the UK Storm Shadows, and Russia has lowered the threshold for the nuclear doctrine. So all of this is going on in the background. How serious is the threat of further escalation at this point?
Well, there's no doubt that there is an escalation happening, but these are just the latest in what has been already an escalating situation. Washington is severely concerned about the cooperation between Pyongyang and Moscow, these 10,000 North Korean troops. That's a large part of the reason why they made the authorization for the missile strikes. Over the past few weeks, Russia has been bombarding Ukraine with missiles. In fact, last weekend was one of the largest missile and drone bombardments since the start of the war. This crisis has been escalating. And again, part of it could be because both sides are trying to strengthen their hand ahead of Donald Trump coming into office. But either way, the situation has been kind of growing more tense, and certainly things are not de-escalating.
Yeah. Greg, thank you so much. Great to have you with us. That was Bloomberg's Greg Sullivan. Jen?
Yeah, Jumana, let's just stick on the White House. President-elect Donald Trump is poised to skip over FBI vetting for his nominees, upending more than 6 decades of precedent. It puts him on a collision course, though, with members of his own party. For more, let's go to Bloomberg News editor John Harney, who is joining us from Washington. So, John, tell us what's happening here and what's the likelihood Trump will actually be able to forego this process?
Well, certainly, he hasn't taken office yet. These hearings haven't happened yet. So there's still a lot of negotiation, perhaps, or a process to go through before you get to the process. But, Trump has been, and many of his allies are deeply suspicious of the Justice Department and the FBI from what happened during his first term with the investigations, and then with the investigations that occurred after he left office and led to indictments. Senators, though, of both parties are traditionalist, many of them, and really would like to keep the FBI in the picture as far as background checks. Ironically, one of the most notable candidates, Matt Gaetz, has been the subject of investigations himself, and is now in line to run the Justice Department.
Right. That's why it's been very interesting to see sort of the response from a number of lawmakers about whether or not Trump actually does this. John, I also want to talk to you about what we're seeing with crypto. We've seen Bitcoin, again, reach new levels. A lot of that is largely off the back of many people anticipating that Trump will embrace the crypto industry in a way that we haven't seen before. What could this potentially look like under a Trump administration?
Well, as you say, he started out as a skeptic. He's become a convert, and he's a sort of convert who can actually elevate this movement. There has been speculation that he might create an office within the White House of some sort of someone who would oversee crypto policy. Now, would that be like an advisor with a relatively small staff, or someone with a much larger purview? He has said, and this has, of course, been he has many eager listeners in the crypto industry, that he doesn't think much of the regulations from the SEC and other bodies, and has really sees a brighter future for the industry, and with that, crypto certainly will have a much larger presence in this new administration.
Do we know yet, though, what that office could potentially look like? This would, of course, be a new precedent, a new office for the White House. Any indications, though, what in particular the focus would be?
Well, certainly a regular, regulation. He has been much more amenable to the possibilities of crypto. Talked of even the Treasury having some sort of role in with currencies and that sort of thing. But the details have yet to emerge. We don't, as you know, we don't. He has not chosen a Treasury Secretary or a candidate for Treasury Secretary yet. So much of his economic agenda, it has to be filled out with personnel and policy.
Yeah, and then we'll, of course, dissect that. But fascinating to get this insight from you. Bloomberg News editor John Harney there in Washington staying up for us. John, great to have you on. And sticking with cryptocurrencies, demand for cheaper wire transfers is driving a multi-billion-dollar boom in the trading of stablecoins across Africa. The details of our big take story is coming up next. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabisladja in Johannesburg. Now, a U.S.-based startup backed by Twitter co-founder Jack Dorsey is building a $3 billion crypto market in Africa, riding demand for digital substitutes for the U.S. dollar. Cryptocurrencies that track the dollar are becoming a popular workaround for companies held back by currency shortages and dysfunctional banking systems in Africa. For more on today's Big Take, let's bring in Bloomberg's Loni Prinsloo, who follows the sector very closely, and she's here with us. So, Loni, thanks for being with us. Talk to us first about maybe how Yellow Card got started on the continent and what's the significance of this.
Sure. So that's quite an interesting story. Basically, a guy called Maurice met this Nigerian guy in a banking line on campus, had a bit of a chat, and then found out, oh, this guy's paying $90 to send a few $100 home. Mm-hmm. And of course, that sort of triggered the interest in what can be done about this. 2 years later, he finds himself in Nigeria, here without a visa initially, and he tries and sets up this crypto platform, which is not the easiest to do always if you know the Nigerian market well. Till today, they don't have a fully operating license in that country. So, but they do offer some financial services, and they have managed to get some other licenses in Africa, including one in Botswana, and then most recently one in South Africa, which is South Africa is the biggest economy on the continent, but there's a lot of competition there with Luno and Binance.
So then what we're seeing across the continent, Loni, is a lot of young people. We were just doing this story on our podcast. Young people are using crypto. Regulators are trying to keep up with it or regulate in some way. Where do you see this going next? I mean, how does Yellow Card operate in a place like Nigeria and Kenya where the regulators are trying to crack down?
Yeah, so the regulators, as you say, are trying to catch up, and also you don't want your financial system skewed with everyone sort of taking money out of the country, so they're quite careful. What Nigeria has done very recently is they did give 2 companies, not Yellow Card, but they gave 2 companies an operating license. So it's sort of like a pilot, and these 2 companies will then operate for a year, and then they'll decide what to do. So in the meantime, there has been quite large adoption of crypto still in Nigeria. This is because limited, as you say, there's quite limited sort of banking infrastructure. And you have to find, plus the Naira has devalued 70% against the US dollar this year alone. So you have to sort of find ways around this, as you said. And so what happens often is you then buy your US dollar-linked stable coins, put in an address somewhere else, and then it gets drawn on the other side. So definitely we'll see where the regulators go with this. South Africa has come out with quite a number of regulations to allow companies to operate, but we'll see where Nigeria goes with this and Kenya goes with it.
Could we see a company like Yellow Card continuing to proliferate across the continent? I mean, they're also operating in other EMs across the world.
Yeah, they are. It's just the full operational license. As I said, they have in Botswana and South Africa, and then they are in about almost 20 other countries. So I think that's quite a lot of running around and talking to a lot of regulators on this. But there's definitely a big need on the continent for maybe a system like crypto. It's much cheaper when you want to remit money to your family. So, yeah, and I mean, that's where the idea came from. Instead of paying $90 for a few $100, now you pay, a fraction of that.
Right.
So, yeah.
It's a fascinating story. That's our Bloomberg Big Take today. It also includes the story of how this guy is actually from the U.S., from New Orleans, was in a Tanzanian jail. It's fascinating. Loni Prinsloo, though, joining us here in studio. Really appreciate your time. Jumana?
Thank you. And I also need to make sure I read that big take myself. All right, a quick look at markets before we head to the break. Markets digesting Nvidia earnings, seeing a bit of a push lower on the Nasdaq futures, down about 0.2%. Coming up, Turkey's central bank is expected to pivot towards the interest rate cut after one more hold. We are live in Ankara next to discuss. This is Bloomberg.
This is Horizon's Middle East and Africa, our top stories this morning. Asian stocks track Wall Street lower as Nvidia earnings fail to impress investors. Shares slip in late trading. Adani shares sink after the U.S. charges founder Gautam Adani on fraud. We're live in Mumbai with the details. Plus, rate decisions from South Africa and Turkey with new risks emerging. The SARB is set to cut by 25 basis points. Ankara, meanwhile, is set to hold. It is just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasajja in Johannesburg.
And I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to the second hour of Horizon's Middle East and Africa. The big news yesterday, Jennifer, was Nvidia earnings. So walk us through how markets are reacting.
That's right, Jumana. That was the big news. And really, you can see the impact reverberating across markets. So let's just take a look at where they're positioned ahead of the trading day. As you can see, U.S. equities clearly still showing some downside after those Nvidia results. We saw the indices closing mixed on Wednesday prior to the results. But in after-hours trading, we did mention Nvidia dropped more than 2%. Although we did hear from Dan Ives earlier. I know you were speaking to him. He said it's still a champagne moment. We'll see whether or not that continues when the markets do open later today. We also have the U.S. 10-year yield on the board there, with the 10-year at about 4.40% after rising across the curve on Wednesday. Those moves then follow a lukewarm reception to a 20-year USG auction that we did get. And also Boston Fed President Susan Collins speaking, and she's saying that more rate cuts are needed, though she said proceeding carefully to avoid going too slowly or quickly. Bitcoin on the board as well. Bitcoin is a big story for us this morning, Joanna, as you know, climbing to a new record not too long ago, just over 97,000, $889 there, and continuing to climb increasingly on the expectation that Trump's administration will bring a more crypto-friendly environment. We were just speaking to our reporter about potentially what that will look like. And that brings me to this terminal chart. It rose more than 2% to a record high, and we're seeing it very slowly approaching that $100,000 mark. The interesting point, though, is that our Bloomberg MLive colleague, Garfield Reynolds, is asking the question whether this 100,000K milestone will be different than other round number milestones, or whether or not it's just going to be followed by a retreat as we've seen in the past. But watching that very closely, as we always do. Let's check in, though, on how markets in Asia are faring. Bill Hwang is standing by in our Singapore studio. Hey, Avril, how's it going?
Hey, Jen. Yeah, I thought I'd just focus on what we're seeing in the Adani group of companies, how the stocks have been declining, really badly beaten up, including their bonds. But to put things into further perspective for you and what this means for the broader India markets, this is coming at a pretty inconvenient time because we see how the Nifty has already been declining for the past 2 months, and the U.S. charges are likely to just put long-term investors West is even further on the sidelines as they assess the potential fallout. And that's the point that MLive's Mark Cranfield is making. He says that this latest incident is likely to push the Nifty further below the 200-day moving average. And while, yes, in 2023, the early part of last year, we did see eventually a recovery in Indian markets following the Hindenburg scandal, the point he's making is that this time around, it might take a lot longer. Guys.
Avril, thank you so much. And we continue to watch the fallout of what is happening, specifically to those Adani-centric stocks. Some of them are down more than 20% today in trading. Now, Turkey's central bank is set to hold its main interest rate for an 8th straight month this week, though policymakers could indicate the start of an easing cycle as soon as December. For more, let's get out to Selva Bahar-Baziki from Bloomberg Economics. Selva, so a lot of things going on here. We were talking about President Erdogan's comments just a week ago, suggesting that it perhaps is time for the central bank to think about cutting interest rates. How likely is it, and what is the analyst community expecting out of the interest rate decision?
Morning, Giovanna. Yeah, the president's comments definitely ask to add to the risk that the cut cycle could be arriving sooner and faster. But we do maintain our position that we expect the central bank to start cutting in next month's meeting. And that's based on the two criteria that we've received from the central bank. One, the central bank wants to see a significant fall in the underlying trend of inflation. And we think that's going to arrive for November's data due in December. And number two, it wants to see inflation expectations moving closer with its own projections. Now, it actually did receive good news on that front from households and firms earlier. However, very recently, markets' expectations for year-end inflation jumped up. While the central bank is, considering both effects at the same time, I think the policymakers will want to see that the market's expectations still remain within its band of projections for year-end, and therefore, again, setting the scene for a cut in December instead. And that seems to be the wide view now, converging towards that expectation as well.
Yeah. How do you think the investment community would react if they did actually opt for an interest rate cut today? What will be the ramifications perhaps on monetary policy and the look ahead to monetary policy in 2025?
Actually, it depends on communication. If the central bank were to say that they have looked at the data and they see the easing that they expect in the inflation actually arriving for sure, and that points to a certain easing ahead, then that's a different reaction creation setting than if the central bank were to just keep mum and cut and say, oh, we see the conditions have formed. So if we do get that detailed communication from the central bank, then I think that it's going to have a minimal effect, although, again, a little bit of pressure on the lira for sure, versus if we get no detailed explanation, then that's going to definitely be a downside factor on the sentiment on the lira.
Yeah, so watch out for both the decision and the communication, as ever, with these interest rate decisions. Selva Bahar-Baziki from Bloomberg Economics, thank you so much for the preview. Jen?
Yeah, thanks, Jumana. Now, from one central bank to another, the South African Reserve Bank will likely deliver another 25 basis point rate cut, lowering rates to 7.75% later today. Now, Bloomberg Economics is expecting inflation to remain below 4% until mid-2025, supporting further easing of the SARB's restrictive policy stance. Let's bring in independent market analyst Nolwandle Mthombeni, who is here in studio with me. So, Nolwandle, great to get you on. As I was reading in a bit more, the expectation is 25 basis points, but there's not a consensus about that. Some people potentially want to see 50 basis points. What camp are you in?
I think, we all want to see 50 basis points, but unfortunately, all of this is data dependent. At this point in time, there has to be enough risk to inflation to warrant a more aggressive stance by the SARB. We had an inflation print yesterday that came out, which was better than expected, but unfortunately, a 20 basis points jump in terms of the expectation, improvement on the expectations, is not enough to warrant the doubling of a hike, of a cut. So at this point in time, most likely it will be that they will stick to 25 basis points, especially as a lot of things have been going on geopolitically in terms of the expectations around inflation to actually be now on the upside.
Well, and talk about that, because as you mentioned, this was unexpected that we saw this decline to this extent on Wednesday. What are the main risks in the short term, would you say?
As we stand now, we had between September and which is now our last rate decision was, and now in November, we've had an election in the US. And since then, we've seen how the dollar has strengthened. And as a result, all the gains that the South African economy got from a favorable exchange rate are going to now dissipate. So the problem is now that we are facing now currency headwinds, which ultimately will impact our current account balance, and as a result, inflation is likely to go to the upside. On the other side, we know fuel was one of those commodities which was favorable for us because they are one of the reasons why we had such a favorable print yesterday. But as we stand now, we are seeing that it's a bit of a stabilization, and because of the currency, it's going to offset any positive gains. So we're sitting here looking at possibly increases in terms of the inflation basket around the currency as well as possibly our fuel imports.
And I want to stick on currency because the unfortunate thing about the rand is that it's tied to a lot of what is happening geopolitically globally. Even though the domestic environment is improving, do you see further downside for the rand, just given a lot of the complications that you're mentioning there?
So it's very hard to predict where the rand will go, but ultimately it's around what happens geopolitically and in terms of what will happen in other emerging markets and as well as developed markets. In terms of domestic environment, I think we've reached peak optimism in terms of the GNU, which was formed after post-elections, and I think the markets are really taking a wait-and-see approach. So I think it's more of external factors which will drive where the rand will go. But as in South Africa now, we've had some improvement in terms of electricity production, so there's been some good positive tailwinds, but at this point in time there aren't any strong factors to gather any strengthening in the short term.
What could potentially have it turn around? I mean, could it be more favorable relations with the US? I mean, what do you see potentially as some upside momentum to the rand?
I think we still have a lot of structural problems within South Africa. For example, our logistics and our water shortage are still big headwinds in terms of growth, and as well as consumers still a bit weak, and we saw retail trade sales are still coming a bit under pressure. So we've got our own problems that we need to fix up first before we can expect any more positive momentum to come up in the works. But definitely, if we see that in terms of any trade policies coming out of the US that they're not going to be our detriment, it'll definitely be positive for Rand, and also look favorably in terms of investment in South Africa as well. So I think even more investment into South Africa will be positive from any positive sentiment. But I think at this point in time, we have to fix our structural problems and hopefully get into favorable terms, especially with now us hosting the G20 next year.
Of course, yeah, taking over December 1st. And unemployment, of course, is a big issue here. Finally, I wanted to ask you, Governor Kganyago is always very fascinating to dissect the language that he has in his meeting. If you were in the meeting later today, this is the last meeting for quite some time. I mean, what would you want to ask him? What is it that you're still feeling like needs an answer from the governor himself?
I think what I'd like to see now, what has changed in terms of their assessment of the outlook and the risks compared to September. If you look into the forecast, what they had was, for example, the forward forecast for Brent crude oil is around at $80, where we're sitting at around $73. So there are kind of a few adjustments that they need to make. So given that we're in a new political environment coming up, definitely what are the changes that they are incorporating in their forecast to guide the market towards, can we do another 75 basis points next year or not?
Will you be in that meeting today?
No, I will not, unfortunately.
No, but we will be watching that very closely. Independent market analyst Nolwandle Mthombeni here in Johannesburg with us. Thank you so much for your time. Now, another story we're following. The AFP is reporting Mali has released 3 Resolute mining executives after the African nation detained them in a tax dispute. The 3 executives, including CEO Terry Holohan, were reportedly freed from detention after Resolute struck a $160 million deal with the government. Earlier this week, Resolute said it had paid the Malian government an initial settlement of $80 million and would disperse the balance from existing liquidity sources in the coming months. Resolute says it will be making an announcement when there is an update to make and will not comment on speculation. Now, coming up, U.S. prosecutors charge Indian billionaire Gautam Adani with bribery. We're in Mumbai next with the details. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Johanna Versace in Dubai. Shares of Adani Group companies tumbling this morning. That's after U.S. prosecutors indicted the group's founder, Gautam Adani, and other executives on bribery charges. The company's renewable units have also scrapped a $600 million bond offering. The New York-based prosecutors allege Adani and other defendants promised to pay more than $250 million in bribes to Indian government officials to win solar energy contracts and concealed the plan as they sought to raise money from U.S. investors. For more, let's bring in our South Asia editor, Anto Anthony, in Mumbai. Anto, what else do we know about these charges?
That's right. So the shares of companies controlled by Indian tycoon Gautam Adani, and there are about 10 of them, has slumped in Mumbai trading today, following the allegations by U.S. prosecutors. Some of the stocks are down as much as 20% or more. They also scrapped a $600 million bond sale in U.S. overnight, and all the debt securities from the group, which are traded globally, are down also. So what U.S. prosecutors have said is that Gautam Adani and his associates has bribed or promised to bribe Indian officials $250 million as they try to get contracts from the government for solar power projects. We have to keep in mind that Gautam Adani operates one of the largest renewable power producing company in this region, and he's also building one of the world's largest renewable power parks in India. So the allegations of bribery are in connection with the power that will be produced out of these parks. Now the U.S. prosecutors are looking at it because he has raised money from the U.S. investors for these power projects.
So interesting. So it could have ramifications on the renewable sector as well. Specifically, I know that you had an exclusive sit-down with the Adanis earlier this year. What did they tell you about the Department of Justice investigations when you interviewed them?
Obviously, this will have huge implications for India's renewable energy targets, which is quite ambitious because Adani was one of the major players which was supposed to step up to help India meet those targets. When we met Gautam Adani and his successors earlier this year, this is one question which we asked. We asked them specifically what are the comments they have on the DOJ investigations which are undergoing. This is the news which Bloomberg News broke, and we have been covering it over the last 1 year. When we asked Sagar Adani, who heads the energy business and who is the nephew of Gautam Adani, said that it is more of a procedural. It's more of a procedural inquiry which is under place. They had also made exchange filings saying that the U.S. prosecutors hasn't reached out to the company or the group with any specific questions regarding so far. But then we have to keep in mind that it was at least 3 or 4 months back. We don't know what has transpired over the last 4 months, which led to these charges coming out quite unexpectedly for the group yesterday. We also have to keep in mind that the group hasn't even been able to put out a statement on this so far, which obviously shows that they were quite shocked and they were caught unaware of these charges which were coming up. But one point which all the analysts that we are talking to is highlighting is that any material impact from these charges can only be assessed once we know what the Trump administration, which will be coming in, how they will take this forward. The prosecutors who has come up with this, they will be stepping aside as the Biden administration's term comes to an end, and it will be the Trump administration's call about how to go ahead with this.
Yeah, so much to analyze from this point. Anto Anthony, our South Asia editor in Mumbai. Well, coming up, Archegos capital management founder Bill Hwang has been ordered to spend 18 years in prison. More on the fall of his $36 billion empire next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Archegos capital management founder Bill Hwang was ordered to spend 18 years in prison for fraud and market manipulation tied to the stunning 2021 collapse of his $36 billion family office, capping a case that riveted Wall Street. Bloomberg TV's Shaquille Amari has more from outside the New York courthouse.
Inside the courtroom, Bill Hwang, wearing a pinstripe suit, froze as the sentence was being read. His supporters, on the other hand, dropped their heads in shock. Hwang was remorseful, telling the judge he felt deep pain for what happened to Archegos. Now, prosecutors, they wanted a 21-year sentence because they said that Hwang was a repeat offender in all of this because back in 2012, he pled guilty to insider trading with another company, Tiger Capital. Now, on the other hand, his defense, they wanted no jail time, but the judge says that was utterly ridiculous. Back in July, 60-year-old Hwang was found guilty of 11 criminal counts, including wire fraud, securities fraud, and market manipulation, after prosecutors say he orchestrated a scheme to mislead his bank counterparties into providing his company with billions of dollars. The implosion of Archegos caused significant losses to major banks, including Morgan Stanley and Credit Suisse. Now, after imposing the prison sentence, the judge says he won't make a decision on restitution because more information is needed, and that the defense and the prosecutors have until December 5th to file briefs. In Lower Manhattan, Shaquille Omari, Bloomberg.
Now, for a look at some other stories we're following this morning, NIO reported lower than expected third quarter revenue as a price war in China takes its toll on the premium EV maker. The company also reported a wider than expected net loss of over $60 million. Sales stood at $2.6 billion, with deliveries topping 60,000 cars. NIO last year slashed the prices of its vehicles by as much as $4,000. And Ford is planning more job cuts in Europe as an industry-wide transition to EVs loses traction. It's looking to slash another 4,000 roles, mainly in Germany and the UK. The reductions amount to about 14% of its workforce in the region and will hit production by the end of 2027. And Comcast is planning to spin off cable TV channels, including MSNBC, CNBC, and USA, into a new publicly traded company. Digital assets such as Fandango and Rotten Tomatoes will be included in the new entity, but the NBC broadcast network will remain the parent company, along with Peacock and Bravo. The spin-off aims to reduce Comcast's exposure to the declining traditional TV business.
Thanks, Jen. Well, as we round up the show, I just want to bring a couple of comments that are coming through. The Bank of Japan Governor Ueda is saying that he is not going to be commenting on short-term foreign exchange moves. This as the yen continues to weaken versus the USD. And the euro in focus, Villeroy du Gallo, the French central bank governor, is saying that he is not expecting a significant inflation hit from possible US tariffs, but does see risks to growth and inflation shifting to the downside. So some more dovish commentary coming through there. That was it for Horizons Middle East and Africa. Thank you from myself, Shimana Bersachi in Dubai, alongside Jennifer Zabazaja in Johannesburg. Stay with us for Daybreak Europe.